just my children and my wife. I thank my lucky stars to be living here today, 'cause the flag still stands for freedom.
Okay, everybody, get up, wave your Bic lighters, good deal, right? I'm Joe Messina, your host. You listen to The Real Side on GCN Live. Always a pleasure to have you with me, 855-REAL-JOE, 855-732-5563. I love having this guy on, plain simple English. And, we don't have all the answers to money. I don't. I don't know about you, but I don't. Look at my bank account. I don't. But David always seems to be able to drive it home in such a fashion that we can get it and we can understand it. I always love when I have Mr. David Fischer on with me. And, like I always say, and I mean this, I know some of you might be tired of hearing it, but he really does break it down, plain simple English for us. And you need to know what's going on in the markets. You need to know what's going on with your money. And no matter how little you have or how much you have, you really need to know how to manage it. Because when it comes to your money and being safe and what have you, if you knew what you were doing, from your early teens or late teens or what have you, you wouldn't have to listen to anybody because you'd be on an island somewhere at Tahiti, and having your martini or whatever, and not really worrying about much of anything. David Fischer, CEO of Landmark Capital, joins me. David, how are you getting that signal in from the island over there at Tahiti?
I'll be at the island in July and August for my anniversary in Hawaii. But
wow.
I'm here in Phoenix, and it's going to break 100 degrees here next week for the first time. So we almost had that last week. But
good for
anyway,
you.
that's nothing compared to low humidity, low volume and rain. So anyway,
yeah.
The markets are hot today, though.
Good. But wait a minute, you say that. But why? I mean, what happened? The Chinese give up? I mean, what happened?
No, we'll talk about that today. We haven't come to any conclusion, and we're still miles apart with China and us. But back to what's causing the market to go up is Warren Buffett. Warren Buffett just came out, and he said he bought 75 billion shares of Apple. And as a result of that, Apple hit all-time highs. It's at 183 as we talk here. And change up 3.7%. Warren Buffett, he had added to his shares, existing shares of 165 million shares. He bought 75 more million shares. And now, and when he bought Apple the first time, that was actually at the end of 2017. But now Apple is the largest holdings of Berkshire Hathaway, which is, those that don't know, Warren Buffett manages the corporation called Berkshire Hathaway. And Warren Buffett is one of the wealthiest investors in the world. He hopes that Apple will go down, and probably when it does, he'll probably buy some more. So that's what's pulling up the market. If that wouldn't have been announced today on CNBC with Becky Quick, and Becky Quick is normally the contributor or the spokesperson from CNBC that always interviews Warren. If that wouldn't have happened today, we probably wouldn't have seen the Dow up today. But it is down still for the week. We're having indexes down across the board, but the Dow is up 1.5% today as we're talking.
Well, listen, I'm going to ask you more about the China thing in a second, but you had mentioned earlier Buffett, Trump. I mean, these singular issues that come up, comments that are made. I caught something you just said now with did you say that Apple is one of the largest holders of Berkshire Hathaway stock?
Berkshire Hathaway is the largest. Their largest stock holding is Apple.
Wow. Okay. All right. And Buffett's not known for being a tech stock guy, right?
No, he's not typically that. Although he is really good friends with Bill Gates, and he's going to pass his wealth down to the Gates Foundation,
right?
Most of it, but besides that, he's not a tech investor. I mean, he likes to invest in railroads and things like that.
Long-term stuff, correct?
Yeah. Physical. He likes to invest in physical things he can touch and feel. He bought a big suit company in China, and that's why all his wardrobe changed about 3 years ago. And that's why he wears nice suits now. But he's not known for buying, in the telecom or Silicon Valley. That's a big change.
I always love when I have Mr. David Fischer on with me, and
with Bill Gates, and he's going to pass his wealth down to the Gates Foundation,
right?
Most of it, but besides that, he's not a tech investor. I mean, he likes to invest in railroads and things like that.
Long-term stuff, correct?
Yeah. Physical. He likes to invest in physical things he can touch and feel. He bought a big suit company in China, and that's why all his wardrobe changed about 3 years ago. And that's why he wears nice suits now. But he's not known for buying, in the telecom or Silicon Valley. This is a big change for him.
Yeah. Now back to what's moving the markets as well. I mean, you said that they moved because of what Buffett did, but there's a U.S. team in China today, and they're talking about tariffs. Would that have caused anything to happen in the market, or you think it would have just floated neutral?
Well, if it would have caused anything, it would have caused the market to go down because they didn't come to any conclusion. And that's why you didn't hear much being said prior to the team going over there. A team consisting of Steve Mnuchin, Larry Kudlow, the two main guys, and there was a few others that went with them. But they didn't want to, put out there exactly what was going to happen, because the belief was they weren't going to get much closer, and certainly they didn't. But the United States met with the equivalency of them in China, and unfortunately, there's a lot of problems still happening. We're a big gap still is away. Let's look at this. Here's what the United States is asking. They're asking China. They left the table with no concrete agreement, except for they're going to continue to have an open dialogue, and they're going to develop in essence, a red phone. I'm making it simple. He's talking about Batman here. A line of communication that they can talk back and forth, so they don't have to hop on a plane, where they can have an open communication between the talking heads. That's what they agreed upon. What America is asking is for China, in writing, that China agrees to the measures of the United States trade deficit by cutting it by $200 billion by the end of 2020. That's a huge, something really big.
We'll get more from David on the other side of the break, more about the trade deficit and what to do, where to bury your money, right after this. I'm Joe Messina, your host. Listen to The Real Side on GCN Live. Fischer, CEO of Landmark Capital. I always enjoy when David's on the show with us. And he does, and I don't just say it, he really does lay it out, as you've heard in the first segment, in plain, simple English. We don't know what drives the market, and, in years gone by, we've been told certain things, but things have changed over the last few years. It's just simply Warren Buffett coming out and saying he's doing something sends the market one way or the other. Trump, same thing there. We're talking with the Chinese on trade trade limitations, whatever you want to call them, guidelines or what have you. And one of the things, I was in the tech business for almost 20 years, and one of the things that always bothered me was the Chinese have no laws, if you would, about stealing our technology. They reverse engineer hardware with software. They crack it, resell it, repackage it, send it back out again. This has got to be hurting companies in this country. First of all, David, thanks for being with me again. And secondly, help me address some of these issues, because it does make a difference.
Yeah, absolutely. If the Dow can drop 500 to 1,100 points based upon the announcement of we're having a fight with China called tariffs, or the possibility of a tax coming into products coming into from China, or our products being taxed that go to China, that's affecting the Dow, and that's why we talk about this, affecting all the Dow, the S&P 500, and the NASDAQ. But China has in place a thing called technology transfer data. And what that is simply is this, is if you had a company, Joe, a technology company, and you wanted to expand and build a manufacturing plant in China, for you to do so, you have to, in essence, show them what you know about technology. They're going to have a waiting time In essence, they're going to copy your data and use it for their own purposes. That's what they've done. And so and then they allow you to either come into their country or not a few months later or a period of time later. And by that time, they've already developed their own technology or use your technology to propagate their own technology and their own manufacturing base. So then we don't have a level playing field. And that's what President Trump is talking about. And that's why in this letter, they're saying to eliminate that in China by January 2019, forcing that practice upon U.S. Companies. So will that happen? I don't know, but we're miles apart. And let's look at the big picture. President Trump, and this is not a cut on President Trump, he has a few more years in office and maybe another term, so 6 years or so at best. The Chinese president, Xi Jinping, will have a lifetime if he wants, because recently China just voted to not have elections moving forward for any duration of time. So put it bluntly, all they have to do is wait this thing out, and the next president, I don't think, is going to have the same passion that President Trump has. This is why the news is saying it's difficult to measure, are we making progress or not, because they're not agreeing upon anything really of substantiated items where the big gap is. And so nobody's, making consolidations to help the other side to consolidate. And unfortunately, time is not on our side, although 6 years might sound like a lot. In Chinese terms, that's just a blip on the clock, as they think in terms of legacy. So I think the waiting game is what we don't have working for us. And this is why President Trump sent a team over to China. He understands that, and he's pushing for this. I don't know he's going to get what he wants. I hope he does. It'll be great for America. We have made some progress, so I will say that, because the number is exports of goods and services have increased 4.2 billion or 2% in March compared to the beginning of the year. And we have some good news that just in the last 30 days, the trade deficit has dropped from $8.7 billion down to $49 billion from $57.7. So that trade deficit is what we're talking about. So it's going the right direction. President Trump wants to not get it to zero, but he wants to get it close to it's $375 billion, and he wants to cut it by 200. And most of this figures that of the good news has come out is Hong Kong. Our trading partner shows a surplus of $3.3 billion. In other words, we've made some headway, about $3 billion in just a couple months here, just by talking about this. So it is working, but, $3 billion a month or $4 billion a month has a long ways to get to $200 billion. That's quite a few months, and that's why time is not on our side.
No, and, it's funny you should say that. I know that we had talked about this earlier, but China definitely, and other countries as well, but China is definitely a long game player, and their people, for the most part, their people are definitely very loyal, and I know this sounds weird, but very loyal to the motherland. They are very much into China and that kind of thing. Don't you agree?
Well, not just I agree with that, and how that has happened is because they have a government news agency, Trump, and you have this huge dichotomy because we have a free press in the United States. You have a government press in China, and it dictates what the Chinese people are going to learn, see, and feel, and believe, and live. And so clearly in the press, before our team went over to China, and they're coming, they're on a plane right now, they're coming back, so there will be probably a press release sometime between tonight or Saturday when they will actually release an actual results of what happened. But I don't expect great things. But anyway, the news media in China, Joe, has been saying that we're not going to give in to the United States bullying tactics, and we're going to make China a great world country. So this is what they're wanting to do. They're making it very well known in their media. And they're saying, don't buy this or that. And they're telling their citizens recently, don't buy soybeans, and soybeans are the number one thing that we import to China, and that is what they use that for, raising pork. It's the number one food source in that industry, and that's a big staple in the Chinese culture. And so they're willing to, affect their lifestyle, and the media propagates it, and the citizen lives that way. And this is a huge effect on the Midwest, where about 7-8 states of our country develop most of its resources and livelihood. So it's going to affect the soybean crops, unfortunately. And there's not enough ability to get the soybeans out of Brazil from China. And so we're going to have some major problems, unfortunately. This rhetoric going back and forth, and the Chinese culture is definitely being influenced by the Chinese government media.
Well, this is what I love about all this stuff, where we've gotten so ingrained, we've allowed ourselves over the years to become so dependent on other countries for certain things that I won't say a crisis, but when you want to make a move, when you want to do something, you can't. You're pardon the term, but you're pretty much hogtied. There's not much you can do. And it's terrible. It's gotten to that point, but that's and now we're fighting with China on the islands that they created, not the natural items, but the islands that they actually created. There's an area of concern for me, especially. But I'm sorry, I dragged you all over the place, but I really believe that these things have a direct effect on the market and how people are feeling about their finances and that kind of stuff. So,
well, that's going to have effect with how North Korea and Japan and the deregulation of North Korea and South Korea putting down their in essence differences and stopping this war that's been going on for 40 years. So that relates, because there's these islands that they're all fighting about on who's going to actually have sovereign ownership of it.
And even that, people will never give them credit, obviously, but even that, people don't realize what a big deal that was. What a big deal it is to have this kind of thing happen. Listen, we got to go for a quick break. When we come back, I want to talk about where gold is going and an update on the Treasury market. I mean, the unwinding of their balance sheet and how much it actually affects us. We'll be back in a minute. I'm Joe Messina, your host.
To pass the bill so that you can find out what is in it away from the fog of the controversy.
Come on, you got to love that. We are back. I'm Joe Messina, your host. Always a pleasure to have you with me. 855-REAL-JOE, 855-732-5563. I so much appreciate the time that you guys are spending with us on here, in the chat room, texting, tweeting, and being part of the conversation. Let's get back to it. I want to know what you're going to do with I want to know what I'm going to do with my money. You know what I'm saying? We're back with our pal David Fischer, CEO of Landmark Capital. Always love it when he's on. It's plain, simple English about what's going on in the finance world. And if you think that you're just going to pick up the paper and look at the stock market every day, your hair's going to go from black to white pretty quick. If it's white, it may go back to black. I don't know. But, as you look at what's happening in the market, you can't just gauge it on what's going on in the market. Some of you guys are going to have to open up the different parts of the newspaper, if you still get one, and see what's going on around the world, because it's more of a, I hate this term. Makes my tongue get stiff. But global, we are more tied into global issues than ever before. And we're tied into Twitter issues, too, or Twitter issues as well. David Fischer, always a pleasure when you're with me.
My pleasure, Joe, to be with you always.
Let's talk about where is the market going from here. Last week gold went down. This week it's up. I mean, we kind of joke around about the roller coaster at the stock market. Where does gold fit in all of this?
Well, the gold market does adjust to what the stock market is doing and also what the dollar market is doing. So let's take a look quickly at what stocks have done. I said last week that more than likely stocks are going to lean towards the downside, and the Dow is down about 1% this week, even though it rose 1.5% greater than that just today alone. It's down, still down. There's a little bit of a change in the rhetoric happening. In January, we were talking about record earnings, if you remember that, in corporate earnings. Today, and most recently, we're talking about those being peak earnings. So it's turned from a bull to a bear type of scenario as far as the terminology. In January, we were talking about global synchronization and expansion, and now we're talking about more of a global slowdown happening. In January, we were talking about inflation being under control or in essence benign. And today, we're talking about inflation picking up. So, are we stalling? Are we slowing? The reports are coming out that, the death of global economic growth are maybe exaggerated and than what reality is. And consumer staples are down a whole bunch, like 40% in the last 52 weeks, 25 to 40% of a lot of stocks. And most of that's happened since the end of January. So the bears are coming out and saying, we're winning the game, so to speak. It is the dollar actually, ironically, has been going up here in the short term. Like I said, it probably would. And that should have been good for stocks. Stocks should be up because we're having a lot of good, numbers showing that we're still in a bull market. We're still in a healthy economy. And the market should be going higher. But it's not. And that's because there's a lot of uncertainty, things like we talked about before. And this uncertainty has caused people to go into gold. We've seen gold hit a bottom, and then now it's bounced off the bottom. It's been in a short-term trading range, and I think it's going to break out of it this year, personally. But people are coming out of the woodwork and saying, we're going to have problems moving forward, some major problems. And another person from last week to this week came forward, a billionaire. He just put half of his net worth into gold. This is not a conspiracy. This is not a small website saying this. This is CBS Market Watch saying this. Egyptian billionaire Negwad Saris, he sees gold surging to $800 an ounce while an overvalued stock market is going to hit the skids. That's his quote. And he also says that we're in the end. You have China, and they will not stop consuming. And he says the people tend to go to gold during a crisis, and we're in a full, here's how he says it, we are full of crisis right now. So I don't know if I believe what he's saying, but he's worth $5.7 billion, and he's the second richest man in Egypt, and he put half of his money in gold recently, or over a period of time, and now he's at 50% of his money in gold. I'm not advocating people put 50% of their money in gold, although I have lots of clients that have done that and even more. But I advocate diversification, and I think we're going to have gold in a bull market this year, like I said, in January. Not a phenomenal one, but it's going to end the year at a higher number than it started. And I think stocks are down about 2% year to date. And I think we're going to have some challenges in that market. I don't think it's going to crash this year. But next year's going to be a totally different environment. We've been talking about that. But central banks are bought. I got a report from the World Gold Council. Central banks, the biggest buyers of gold historically, Joe. The demand for gold increased in this year, quarter one, compared to quarter one last year, is up 82 tons, or percentage-wise about 42%. So that's a pretty big, strong increase in central banks buying gold. And they must be seeing something in the future, because historically central banks are the ones that make the biggest moves in buying gold before a crisis happened. That's been the case. It happened in 2000, before 2001. It happened in 2006, before 2008. And it happened in 2010 before we got a credit downgrading in 2012. And now they're doing the same thing. It's the same story, just a different time.
Yeah, all this stuff, how it ties together. I was listening late last night, sitting around writing some notes, and I heard that China is not, and I don't know how true this is. I'm asking you. You're the expert. But China is not that far away or pushing to become the economic power on the planet. And they've made great, leaps and strides over the last 10 plus years. Any truth to that at all? Or where do you see that going?
Well, they launched their currency called the Petro Yuan, where they can now countries can trade oil outside of the U.S. dollar and use their currency, and that currency can be fully converted to gold, which is in essence what the United States did from prior to 1971 back a few decades. We were the country that was used to trade oil in 1974, but prior to that, countries from 1971 back could use our dollar and convert it to gold, and then Nixon closed that window, and so they found a new reason to do that, to hold the dollar, and they created a petrodollar, and that's what 1974 did when we had agreement with OPEC. And so from 1974 until just a couple years ago, the U.S. dollar was the only currency that you could buy oil in contract. Well, now there's another alternative. So China's been doing about 50, 60 different things. I have a white paper on it, on how they've been setting this all up, because they think long terms, they think in legacies. Where are they at in the scheme of things? Well, they're moving speed-wise, they're moving at light speed, but they got a long ways to travel to knock the dollar off the pedestal. Still, I will say, according to the reports that I'm reading, they're probably representing about maybe 2 to 5% of all the trades in the world. The other portion is going to be in the majority of being the dollar. So they got a long ways to go, but they're certainly moving very rapidly, and they're with full tenacity to get there, and that is their goal. I've always said, one or two headlines will change the economic environment. And that's what happened in 2008. Two headlines changed the markets, changed everybody's lifestyle globally. It wasn't a whole lot that needed to be done, just a couple headlines. Will it take 1 to 2 headlines for the dollar to be overthrown? No, I don't think so in this case. But 1 to 2 headlines could cause the Chinese currency to not be used in 2 to 5% of the market, but 25 to 40%.
Wow.
And, and that won't happen overnight, but that could happen in a year's time. I know that might be aggressive thinking. Some of my associates in my industry think much more aggressive than I do, and I think I'm ultra conservative. I think in the next 10 years, Joe, 5 to 10 years, we're going to have a considerable amount of competition from the Chinese country, financially speaking. And this all comes down to our debt in the treasury market. We just don't have our financial house in order.
All right. Well, if I drank, I'd go drink it now. Anyway, hey, if you want more information on this stuff, you got to head over to landmarkgold.com, landmarkgold.com. David's got a white paper out called Time is Up. Which bubble will burst first to trigger the coming great deflate? I love that. By the way, I love that line, the coming great deflate. 844-715-7311, 844-715-7311, or visit landmarkgold.com. David, always a pleasure. Thanks for being with me. Sincerely.
My pleasure, Joe.
I always enjoy when David's on with me because it's plain simple English, easy for us to understand. We know what we need to do or should do. And it doesn't matter how much money you have or don't have or might have or whatever. You know what? There's always a way to save a few bucks. When we come back, we're going to talk about there's a mural at a school that depicts a warrior sparing Donald Trump's decapitated head. You know what? I'm so glad that love Trump's hate. Aren't you? I'm Joe Messina, your host. Don't go far.